So, Mark, all everybody's talking about is tariffs. The stock market seems to be in free fall. Crypto's falling. But somewhere in the midst of all this, mortgage interest rates are actually getting better. So what the hell is going on here?
It's amazing watching the markets and how quickly they've reacted.
Yeah.
Right. I mean, we've got rates coming down a quarter point, 3/8 of a point. It's just incredible to watch.
Yeah, it's pretty wild. I mean, where are they at? I think you told me you're closing at in the fives today, right?
Yeah, actually, I mean, we had one close in the fives just earlier today, and I mean, people are pleased as punch. I mean, it's great because the market's kind of riding along here, and we keep saying, of course, you have your opinion. Market will pick up when it hits 4. I'm thinking somewhere maybe closer to 6, or maybe 5.5, and we're seeing that. I mean, honestly, and I don't know if we're an anomaly or what, but our office, mortgage applications were up just a little bit, maybe 1%. Yeah, we're up like 28%.
No kidding.
I don't know what's going on, and we're very thankful for that, right?
Sure.
But on the other hand, you've got the stock market, you've got uncertainty going on out there. I heard on the news today as I'm listening to Bloomberg, which I'm sure a lot of people love to listen to and they want to take a nap. But anyway, there were 5 IPOs just today that said, we're not doing it. We're going to wait. We're going to wait a while and see how this goes.
Yeah, well, the market's down, from 42,000 at the high this month to about 38,000 right now. So a full, 4,000 point drop. 4,000 point drop and about 10 percentage points, which is crazy.
One other thing too, I mean, you're watching all this, and what happens when the stock market drops?
People run to bonds.
People run, it's a flight to safety, a flight to grandma's investment, the 10-year bond.
Yeah.
And I think about this, I had an aunt, she wasn't really an aunt, she was one of those people that was close to our family, so we just called her Aunt Elsie, right? And every year for Christmas, you'd get a $100 savings bond.
Yeah.
So I always think of that as that was my first introduction to bonds.
Yeah.
It's a $100 bond, and 20 years later, it's worth $102 or whatever it was, right? But it was sure, and you knew it, and that's the reason bonds are attractive. Yeah. And so when that happens, then the 10-year bonds go down. We went from 4.3 somewhere, now we're 3.8, 3.9. And as a result, mortgage rates also follow that because mortgage-backed securities and 10-year bonds are in competition for the same investors.
Yeah.
And have you looked at your 401k? Don't. If you haven't, don't go look.
Yeah, I try not to look at them in times like this, but I also am not in the selling mode either, so I don't really care. I'll ride the, it's like, not to quote Dave Ramsey, but the only people that get hurt on a roller coaster are the ones that jump off in the middle of the ride. So
that was a great quote.
Actually, not a bad quote. So, don't always agree with everything that comes out of his mouth, but I do like that one.
At least, no. But yeah, I mean, and it's all because of the tariffs, right? And so, we've talked a little bit about the tariffs and why they are and, the reasoning behind. And, Trump says why he wants them. And then, other people, they have a different opinion. And whatever, that's great. But, this is one of the oldest ways, economic tools that's been used, right? And it goes back, like the Boston Tea Party is probably the most prominent, in my mind at least.
Yeah.
I did have a younger generation guy earlier today ask me, so what was that? Did they just dump tea out or something? And I mean, as far as tea goes, I could care less. I mean, it's like Ted Lasso says, it's garbage water. I don't even know why they make that. Just drink coffee, for crying out loud. But whatever. Anyway, point is that, the Boston Tea Party wasn't really about tea. It was about control. It was about the Great Britain, enacting a series of laws that were designed to control the colonists. They were designed to keep them loyal to Great Britain. And so, at first they put it out the Quartering Act. You got to house the soldiers, British soldiers, while they're there at war, in the French and Indian War, and the colonists weren't having it. And then they made some more laws, a little more strict. You absolutely have to do this and this and this. And of course, they didn't like that either. And they said, well, you know what? If you're not going to behave yourselves, then we're going to hire a bunch of governors and judges, and we're going to pay for it by taxing you on not only lead, which of course you used to make bullets, glass, and tea.
Yeah.
which is that the colonists had had enough. They didn't feel like they were being treated fairly, and so they dumped a bunch of tea in a harbor in Boston, and a few days later on Christmas of 1773, they dumped it in the harbor in Philadelphia. Yeah. There were actually 2 tea parties. It was a real good partying time.
The lesser known Philadelphia Tea Party.
Right, exactly. And the whole point was because you had a bunch of pissed off colonists because Great Britain was trying to control them and treating them unfairly, which is one of the reasons that Trump has said, hey, we've been treated unfairly for years.
Right.
We've been getting these tariffs, and there was a hiccup moment when he announced them, on the 2nd, which, we filmed this on a Friday, so that was yesterday.
Yeah.
And sure enough, he came out with the tariffs and people were freaking out. And then all of a sudden he's like, whoa, hold on. We're doing these reciprocal tariffs at half of what they have a tariff for us for. So if they're taxing us 20%, we're taxing them 10. Right. And once people realize that, they're like, oh, okay, it's drastic, but it's not as bad as we thought.
Yeah, and it's hard to argue that, if a country's hitting us at 60%, we come back to them at 30%, that's not somewhat of a reasonable thing. Now, the question is really going to be, how long are these going to stay around? Because we're almost in like a game of chicken with these other countries. Who's going to swerve their car out of the way first? Are these other countries just going to bite down and deal with it and realize that it's going to put so much pressure on the U.S. economy and inflation and all of that, and eventually the U.S. will ease up on these? Or do we win the game of chicken and, tariffs sort of reset and adjust worldwide? Which I think if that were to be the case, and then we drop the tariffs off of these other countries, things could actually look pretty bright. But I think it's going to really come down to how long that they stick around, and then also what the effect is.
Well, that's just it. So all of that being said, where are mortgage rates headed?
And guys, before we answer that question and wrap up this video, we noticed one thing that's a bit concerning. Most of you that watch our videos are actually not subscribed to the channel.
Yeah, what's up with that?
Guys, if you're getting value out of 2 guys talking houses and you're enjoying the real estate/mortgage conversations, we appreciate a subscribe. It costs you nothing and helps us tremendously.
And you won't miss a video.
Thanks, guys. Now back to the content. So, it's a great question, and it's a question that I think has a multifaceted answer, and there really is no simple answer. Most of my clients, my real estate buyers and sellers, think that the mortgage interest rates are directly tied to the federal funds rate.
Right.
Which is to say that when Jerome Powell lowers the federal funds rate, the mortgage interest rates follow. Now, we saw at the end of 2024 that was not necessarily the case. We saw actually the opposite effect of that. Mm-hmm. So you also have to factor in what we talked about in the beginning of the conversation, which is the 10-year bond yield. And when that, that's why you're seeing now that everybody's saying, oh my gosh, the stock market is crashing, the crypto market is crashing. And these are what are considered traditionally the crypto market, much more than the stock market, high risk assets. And as you said, during times of uncertainty, people run for grandma's investment.
10-year bond or, bonds in general, right?
Exactly. And they're not having to offer as attractive of a yield because people are looking to get out of the other markets. And so that yield is going down, which is causing these mortgage interest rates to also go down. So,
so let me tell you, years ago, I always tell people years ago during the mortgage crisis, they repossessed all the crystal balls that we had in the mortgage business to know where rates were going.
Exactly.
But now, we rely on research and and you could make this a full-time job. And thankfully people do.
Yeah, people way smarter than us.
Way smarter than us, right?
As we got called out so perfectly, yes, we are not economists, so just preface that. Yeah.
But the uneducated among us here, we're relying on things like looking at the economic calendar, like what's coming up. Mm-hmm. And I just remember, earlier this week, somebody's like, well, should I lock or should I not? And I'm always telling, look, if you like it, lock it, and even if you kind of like it, still lock it, because then right? But, if you're predicting the future, trying to figure out what's going to happen, and I look at the economic calendar and I see on it that Jerome Powell is going to speak today in Virginia, anytime that guy opens his mouth, you never know.
Yeah, it's a coin flip.
And it was funny today because it actually gave us some insight. Now, one thing, Powell, and rightfully so, has said the Federal Reserve is not paying attention to any of the other stuff that's going on. We're not talking about politics. We're not talking about who's president. We're not talking about tariffs. We're not talking about anything else. And then today, he talked about several things. He talked about how he likes purple ties. He talked about how he's been busy and has not made it to a Grateful Dead show in a long time. And he also talked about tariffs.
Yep.
And he talked about how tariffs may cause inflation. And so if you remember the Fed's dual mandate, right? It is to keep inflation as low as possible. It still have a healthy economy, and then maximum employment.
Yep.
So if the tariffs go up and the economy slows because of the uncertainty, because of just what you said, when are they going to end? How long is it going to last? How much is it? And there's been so much uncertainty there.
Yeah.
Then it was, we're not negotiating at all. And then later on they said, well, actually, if these countries want to negotiate, and guess what's happening is some countries are coming out to negotiate.
Yeah.
Hey, wait a minute. Okay, this tariff thing's not so good for us. Let's talk about this.
Sure.
But Chairman Powell is saying, hey, these tariffs, they could raise inflation, which we've been battling for 3 years. It could slow the economy, which then will drive unemployment up. So what do you do if you're the Federal Reserve?
It's tough. Yeah.
Do you pull the lever to, lower federal funds rate, which frees up money, which then helps employment? Or do you go the opposite direction? You raise the federal funds rate, which slows the economy and more people are out of jobs. It's kind of a catch-22 at that point. And so it'll be interesting to see what they do. But he is sort of suggesting that maybe that's going to be, a reason to hold, or maybe even go the other direction in the federal funds rate.
Yeah, the dreaded interest rate hike. And that's going to be the question. And that's why it's not easy to say what's going to happen in the mortgage interest rate world, because if you look at, if the market keeps crashing and the 10-year bond keeps going down, theoretically, rates are going to drop as well at mortgage interest rates. However, the counter argument to that is, if these tariffs are causing massive inflation, and Powell decides to pull that lever and increase the federal funds rate again, especially in a year where we were talked about having a lot of interest rate reductions, now we've cut back on the amount of anticipated reductions, and we're not shutting the door on an increase. Then how does that play into effect if the bond market's going down, but Powell is still raising the federal funds rate? What happens there? I don't know. You're the expert on that. You're the mortgage guy. But I think that it could cause some uncertainty, and we could see a situation where rates are a lot better than they are now at the end of the year, or we could see a situation where Powell does what is the unthinkable and raises the federal funds rate in 2025, and we see a hike.
And today, so yesterday was good. Rates were in good shape. We had a lot of lenders come out and price for the better. And today was even better. It started out, and then Powell opened his mouth. And then slowly, as the market kind of digested that, we saw rates go up again this afternoon. And it was 1/8 of a point, not a huge, tick up, but certainly a tick up.
Yeah.
And it's just the uncertainty in the market is what's doing it. Now, all of that being said, one of your coworkers, told me one time, she says, you're always so calm. This guy, he's freaking out. Can you just call him and use the radio voice and calm him down? And, I think that's kind of what you got to do in this business.
Yeah.
You kind of got to, take a step back and, it's all going to be okay.
Exactly.
You may not get a 4% rate. You may want to refinance it down the road, but it's still not a bad time to buy a house.
No, not at all. And you're also seeing a little bit more inventory creep onto the market. So it's becoming a bit more of a buyer's market again, which we haven't had a true strong buyer's market in quite some time. Immediately post-COVID was probably the strongest seller's market since I've been alive. So, maybe things are shifting in favor of the buyers. And if rates, especially if they tick down into the high fives and you can afford the monthly payment and it's palatable for you, buy the house, and then you can always refinance later on. And everybody always says the same thing. Well, what if I buy the house and the market crashes? It's like, well, we that could happen. None of us have a crystal ball, as you said, but the reality is the longer you hold on to a house, the higher likelihood that you're going to make money when you sell said house. And there really, if you look in 5-year slices, there's very, very few 5-year slices where home prices went down over that time. So you have to look at your personal situation. Are you looking to buy a house and sell it 2 years from now? Yeah, with closing costs and realtor expenses and stuff like that, you probably do stand a chance of losing money. If you're going to buy a house and stay there for 5 or 10 years, even with the closing costs and fees associated, you're probably going to do just fine. And certainly better than you would have if you rented for 5 or 10 years if you look at where rent prices are.
Yeah, exactly. And I mean, you got to live somewhere.
Until Mark Zuckerberg figures out how we can all live in the metaverse, I think we all have to live in houses. And
fair point.
We're going to have to either rent or buy.